We have some rather large catalysts coming our way in the markets. I would like to talk about them. I am Dr. Stock, Doctor of Education. And do you know what a snowman's favorite food is? It's a burrito. All right, guys, I don't know if you've been watching the markets, but it is an absolute crazy time. I'm going to show you what I think is so interesting about it. SPY, QQQ, IWM, do not discount Russell 2000 in this. I think that is one that could most definitely outperform under the right circumstances, and we could possibly have that coming up for us. I'll tell you how I'm playing this market and where you can find that information for my buys and sells, about my options course, and about the offer from Mumu. In the meantime, I do want to get right into the charts because I am just so darn excited about what's coming up. So here we go. We are looking at SPY. So this is the S&P 500 is what's being tracked by this ETF. And I have this lonely gray, my goodness, what color is that? Gonna try and pass my eye test and my color blindness and all that kind of stuff. This yellow line that I have up here at the top, this is marking. This is at 467.13. And why such a specific number that we would have just kind of floating up there? Well, let's zoom out a little bit. As a matter of fact, let's go out to the weekly chart for this one because it's easier to see. We are almost at the all-time high. As a matter of fact, let me do this for you. I'm going to go back to the daily chart. We're going to look at the most recent closing price, and we're going to talk about just how many percentage points we are away from that. So we closed today. Let me zoom in so we can see that candle. We closed today at 461.99 as I see it on my screen. So let me type this in, 467 point, what was it again, 13. And then we're going to divide that by today, which was 461.99. There we go. Grand total, 1.011. So we are 1.1% away from all-time highs in the S&P 500. So that is absolutely incredible for us. And I do think that this is the week that we can be pushed up to that. I think the inflation reports can do it. I think that we can set new all-time highs in this month of December, possibly even into January. I think that we could have that going on. And that doesn't mean there wouldn't be any sort of settling in between. Wouldn't mean that we wouldn't find any resistance and have to retest support or anything. But I do think we have new all-time highs coming for us. So for the SPY, as we're looking at it, like I said, this yellow line that we have up here at the top is most definitely where we have that resistance for that all-time high. And it is something that I think that we could absolutely break through. So today, it was a nice day. A little bit shaky at the start, but man, did it power through and really perform for us. Not only for the SPY, but we also go out to QQQ. If I type enough of those Qs, I said a while back in the Discord, I think it was early last week, I said if we break up above this top trend line here in white and this other trend line, that we could really go on from there and continue in a bullish direction. So far, we have the RSI on the SPY, and the Qs so far is getting close to that overbought territory. But if you look at the weekly RSI for those, we are in bullish territory, but not yet overbought. I do think that there's still some room up ahead for us. I think the Qs can outperform what we see in SPY. So QQQ tracks the Nasdaq 100. And I'll tell you what, big tech today, it was rough for big tech today. Nvidia was down. I think Microsoft, Apple, I think a lot of the Magnificent Seven, maybe even all of it maybe was. However, in the Nasdaq 100, 9 out of the top 10, at one point in time, 9 out of the top 10 stocks were semiconductor-related stocks. The only one to beat out, I believe, was Siri. I don't know if it ended the day on top as the biggest gainer for the Nasdaq 100, but Sirius XM Radio would be the only thing that led it off as in the number one spot. The other 9 out of 10 were all semiconductor plays. And what didn't we have in the lead out of all of that was Nvidia itself. And so that is something, I think that was a bigger move for big tech. I think that we have a lot of capital flowing out of those. And then what we're going to see possibly from that is maybe some upward movement, but in a thinner traded area where there's not as much volume that goes along with those, as we have hedge funds and institutions, possibly even retail investors looking to find bigger values elsewhere. And I think that that's what we're seeing in a lot of other stocks that are around there. And semiconductors are most definitely one of those spots that have been beat up. So let me put this back up here. We're going to check out IWM. This tracks the Russell 2000. And it's been quite a ride for us so far. Mind you, I have all these support and resistances that are nearby here for us. And I want to say that for IWM, I do have a call option out on this. I believe that 185 is the strike, is the January 19th expiration that I have, because I do think in the near term that this thing could push up for us and that we could possibly revisit that 192 level. If things go really well, maybe 197 by the time that we get there. And that would be over a 3x gain for me should we happen to see that much bullishness come out of this. Now, mind you, that hinges on the inflation report going well and also getting good news from the Fed, especially considering that we have the summary of economic projections coming up for us as well. So IWM, I do have a position that I took it today, and then also some other ones that I have. And I didn't take a position directly on QQQ, but I did on QQQ, same direction, bullish on this one as well. A little bit less risk in the amount of exposure that I put into it, but this is one, I believe I took the $45 strike. Again, the January 19th expiration, because I do think that this week is going to be a huge catalyst for us, so it still leaves a decent amount of time value for us, but it also does keep down some of that risk capital by not going too far out, but I do want to watch that time value. I don't want to hold on to these outside of this week. So another play that I have for you, and I didn't put up here, and this one is Mara. Now this one most definitely run up, found a little bit of support for us, but I don't think that studying Mara's chart is the thing that really tells the story. I think more of it is told by looking at what we have from BTC, which had a big sell today, but you'll notice return back to my support line that I have on here. And so this is one that I think could most definitely perform for us. Check out that volume that we got. As a matter of fact, let's break it down and let's look on the on a 15-minute basis where that volume came in. It looked like it was staggered throughout the day. Where do we get the first big movement here on volume going all the way back Sunday 23rd, 2100 hours, so 9 o'clock yesterday that we got that big sell, and we did rebound and we were able to close just above that line. So that is something that we want to keep an eye on. Maybe we even come down as far as 38,000. I do think that we have another run in there somewhere leading up to anywhere from January 5th through the 10th for the ETF. But I think that some of that risk capital is sort of being pulled back and held back until we find out from the Fed what's going on, and also from inflation what's going on, that if we do end up in that risk on environment, I think that the Mara option that I took could most definitely print for us. So let's go back to Mara's chart for a second. And I believe, as a matter of fact, let me just check it real quick. I can tell you the strike price that I took for Mara. I apologize that I don't remember this off the top of my head. I took a $14 call on Mara, but this one going all the way out to February, and that expiration date on this one is the 16th of February. So it is the monthly options on this one. And so for this one, I think that should we hit that 50K number, I think it's possible that we do for BTC. I think that we exceed this previous high that we got from Mara recently, and we're going to have to watch and see if there's still that risk on environment for crypto. I think the next 2 days could be rough for it, and we'll happen to watch and see maybe inflation reports enough, the CPI, maybe PPI. Definitely by the time we get the Fed, we're going to get that answer if we're going to pump and go more risk on, or if we're going to dump away from that and we're going to go more of a risk off scenario. And I think the Fed is going to be a huge influence on that. So those are the positions that I took today, and I post all my buys and sells over at the Patreon. And I did say that I would tell you where to find that. So let me put this up here. I'll get to the promotional offer for Moomoo in a second. The Patreon, that link is down in the description. I post my buys and sells in the Discord that's available through the Patreon. I also have my options course that I'm building out over there. And then the Moomoo link is also down in the description of this video. 5.1% on your unused cash and up to 15 free stocks based on your deposit level. So check that out. So moving away from that and getting back to the commentary that I have for you, the last thing that I want to share with you is just a little bit about summary of economic projections. I'm going to put out a full video on this one, but I do just want to point out something interesting. So we're getting a new one in on Wednesday. It'll come out with the Fed meeting. So we're going to be watching for that. I think it comes out at 2 o'clock along with the interest rate decision. So it'll be dropping then. And here's what you want to pay attention to. You want to absolutely look at 2024 at this higher for longer thing that they keep talking about for us. Let me zoom in a little bit more. This 5.1%, that's the end of 2024. That's what they're saying that it is. But if you look at the CME Fed Watch tool right now by May, we're already looking like we're going to be down to that level, possibly even below that level. So we're going to have to see how that plays out for us. Now, the things that I find very suspect here, and this is from September, by the way, we're already down to 3% for PCE inflation. So we're down below where they thought that we would end 2023. And then we're also down, I think, to 3.5 or 3.6, but we're below this 3.7 in October's numbers. And I think November's numbers are going to be even better for us, that we're going to see it down below these values that you see here. I think PCE inflation has a very strong potential to be down in the 2s. And then core PCE, I think by the time we get December's numbers in January, then we find out where we end up there, and that'll be at the end of January that we get December's numbers from the PCE. I think core PCE could be in the low 3s for us, that we're looking at more like a 3.2 or a 3.3 in that area. We're going to have to watch and see if we absolutely do get that. Like I said, this isn't a full video on what we have for a summary of economic projections because there's just too much going on in this video, and I don't want to overwhelm you with that. I will make a separate video on the SEP, Summary of Economic Projections, for you, giving full details on how I think that is going to impact the markets. But I do want to summarize this. S&P 500, I think we have new highs coming for us between this month and next. And then also same thing for QQQ. IWM, which is the Russell 2000, I don't think that we put in new all-time highs, but I do think that we retest the more recent highs that we have for that we end up back in the 194 to 197 range. By the end of the year, I think it's totally possible, and a lot of that is predicated on what we see from the inflation reports and what we hear from the Fed. If those two things collapse, then you can kind of wash away what I said, because then it changes the game a little. We're going to have to reevaluate and talk about where we could go from there. If inflation comes in hotter than expected, that's going to be something that the market is going to react very negatively to, and I think that it's going to drop really quick, and it's going to be a big red pepper day. Thanks, Stockmo, for the vocab there. And then same thing from the Fed. If they come out super hawks and they indicate that there is likely another rate hike coming for us, although I don't for a minute think that that's going to happen, and neither does the bond market. Right now, it's a near certainty that we stay exactly where we're at right now for that. But should we get something totally unexpected from the Fed, then that can also be a downward pressure on that. The big thing, I think bigger than what Jerome has to say directly, is the SEP itself, and that's why I'll make its separate videos. Thank you guys for watching this one. Check out the links down in the description for the Patreon. Come on over and join me in my community, see how I'm playing these markets, and then also don't forget about your free stocks from Moomoo. And as always, guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.